Hi everyone, Jeff Yastine here, editor of Total Wealth Insider. Welcome to Market Insight for Monday, March 23rd. And I'm joined, of course, by my friend and colleague Ian King, editor of Automatic Fortunes. Ian, we're doing fine on our end, kind of just hunkering down. I'm hunkering down at home with my family. You doing okay?
Yeah, same here, Jeff. Just hunkering down, trying to wait this out and really thinking about all those medical professionals and emergency service workers that are really on the front lines of this thing.
Yeah, I couldn't agree more. And of course, the other part of it is it leaves people like you and I plenty of time, for better or for worse, to thinking about the stock market and how all this plays out. So this morning we saw the Federal Reserve basically go all in on quantitative easing, QE, infinity, or whatever we want to call it, as well as the interest rate cuts over the last couple of weeks, basically down to zero. What else does the market need, in your opinion, to stabilize here and to restore some confidence looking out from here?
So something that I explained to my subscribers last week is that this is really three black swans all at once. You have a health black swan, you have an economic black swan, and you have a financial black swan. And let me explain what I mean by that. You've got this health crisis that happens once every 100 years with this global pandemic, and it's causing an economic black swan because people have to stay home and can't visit businesses, and therefore those businesses are also laying off the workers. And this is leading into a financial black swan where, because these businesses can't operate currently, and I want to talk about small businesses in a second, but because of that, the financial markets essentially have been just completely tightened up. Credit has dried up. You're seeing moves in volatility within the stock market and also the credit markets that, you shouldn't see until once every 100 years, even though we had something like this similar in 2008. But something you and I discussed before, and I just want to show this to our viewers, a chart from Deutsche Bank, which talks about small and medium-sized companies playing a very important role in the economy. And 83% of employment in the U.S. Comes from small and medium-sized businesses. So, you think about all these stocks that we're trading, but these aren't the ones that the government should be focused on right now. It really comes down to these small and medium businesses that are in everybody's community are the ones that are going to be hit hardest by this and are going to lead to massive layoffs just in the next couple of weeks because, they have to furlough their workers really here in the short term because businesses can't operate.
So, as we're discussing this, as we're taping this here, Monday morning, the Senate has been, and both sides in the Senate have been sort of wrangling over this gigantic stimulus aid package of, somewhere between 1.6 trillion, 2 trillion, might be even higher than that by when all is said and done. And over the weekend, there's lots of discussions in the Senate, and they just couldn't work out an agreement. We may yet see something by the end of today. It's just impossible to really know. How important, given everything you've just said about small and medium-sized businesses, how important is that to, again, restoring confidence and stabilizing things? I think it goes exactly to what you're saying. And if they can get this thing out there, it will, and in enough size that it will be at least a first start towards getting things so that people know, all right, there's something in place there. May not be everything that anybody wants, but it's at least a first start towards supporting the economy till all these other businesses get back on their feet again.
Yeah, I think the fiscal stimulus is going to be more important from the market's perspective, just because I think back to something Ben Bernanke said about monetary policy when he was the Fed chairman. And he said that monetary policy is basically a blunt instrument, okay? But fiscal policy is more of a surgical tool. So a lot of these problems in the economy can be handled more with fiscal stimulus. And we're talking about things of just giving loans out to small and medium-sized businesses that are, interest-free and they can pay back at a certain time. But, we're in the middle of a serious crisis right now, and we need to figure out how we can get money into Americans' pockets in the fastest way possible so that the entire economy, people who have to make their debt payments and their mortgage payments and their rent payments, this is going to have second and third order effects that I don't think we've, really come to grips with just yet. So, I'm hoping they can get this done as fast as possible, get money to people who need it, help businesses that are in the process of laying off workers and, forced to shut down. So you can have a restaurant, for instance, that has to close for a couple of months. And at the same point, you can make sure the restaurant can at least pay their rent so they're not forced to evict, so that when the economy starts to pick back up again, when we're through the health crisis, they can get back to their operation faster than if there wasn't any fiscal stimulus. So I think this is really a key thing that the market and investors really want to see right now.
Yeah, I agree. And I do think that even without this stimulus, and granted, we need the economy, the U.S. economy needs a stimulus, absolutely. But I think things are so extreme right now that, like when you talk about rents, I think there's a lot of landlords out there that frankly, they know they're not going to be able to collect from these businesses. And if they have to give them a couple of months of free rent just to get on their feet, I think they'll do that, because good luck trying to get somebody to take over that lease if landlords in general don't do it. So, we saw something like that even in the Great Depression, where there was no credit, and basically you saw these sort of, you call them wooden nickels, paper promissory notes, those sorts of things, where it's all basically an IOU economy until the banks reopened and things got back to a stabilized basis again. And obviously that's what the stimulus package is aiming to avoid. Let's go to the $1 million question here, which is stocks. In your view, is it too early to buy stocks at this level with the stock market down? The S&P's down, 38% as of this morning.
Yeah, you wonder how much further this can fall. I mean, could we be down 50%, 60%? It seems like we're taking the right steps to avoid a prolonged recession, dare I even say depression. So that's a good thing. I don't know if I would go all in at this point, but I can remember in 2008 when the markets were really selling off in the fall of 2008. And that's when we were doing TARP and TALF and all these other, and then the Fed launched QE. So all these programs, the market kept falling when these new government stimulus programs were introduced. And then eventually the market bottomed when we had bad news and people just stopped selling. So I'm looking for that. I mean, I'm looking for, maybe we have another outbreak, unfortunately, in another city, but the market starts thinking about how New York has starting to flatten the curve, or in Washington, for instance, the number of new cases being reported daily has started to slow down. And that's what I think the market wants to see, is when this health crisis starts to subside a little bit. I don't know if we're there yet, but I know just from seeing what happened in China and also in other countries in Asia, like Taiwan and Hong Kong, for instance, we will get to that point. It's just not going to happen tomorrow, or perhaps not even next week. So that's really what I'm looking for, is when we can combat this health crisis. It seems like we're going to sort of stabilize everything in the economy, and the government and the Fed is doing as much as possible. But I think investors and traders are more worried about what happens with the health crisis right now.
Yeah, I agree. And I think it's possible to buy stocks here, but obviously you're going to have to buy them knowing they're going to be underwater for a period of time here. And you've got to focus on companies that either have great balance sheets, or two, may not have the greatest balance sheets, but have a lot of assets that they can either deal out, sell, or mortgage somehow to make sure they get through this period, and don't necessarily need to rely on bailout money from the government. But this is one of those points where things are very, very cheap, but they could stay cheap and get cheaper for a while before it's obvious that things have bottomed. Any last thoughts, Ian?
To your point, also, this crisis is causing an acceleration in innovation. So I was looking at some of the data that's been released from China about online e-commerce and online grocery delivery. If some of these Chinese e-commerce companies are doing really well through this, especially when it comes to grocery delivery, which they're seeing upticks of 300 or 400%, specifically among the elderly, who are usually the least tech savvy demographic. But now they're adding all these new citizens to these online grocery platforms, and it's driving innovation in that sector forward. So you've got to think about the companies that do refrigerated warehouses here in the United States, where they can hold all this produce, or companies in the U.S. such as Instacart, and Uber has Uber Eats, which does grocery delivery. Whole Foods with Amazon does grocery delivery. So I think you're going to see an uptick in sectors like that in technology because of this crisis. Also, I think robotics and drones are going to play a big wave in the future, because we're going to use less human-to-human interaction in terms of delivering, let's say, pharmaceuticals. In China, they're delivering drugs by drone in some cases, and you can see how this crisis is pushing innovation forward because of that. So there is a silver lining in here, especially for tech investors.
Absolutely, absolutely. And companies that are doing this sorts of stuff, and you and I have talked about Walmart and Target, and of course Amazon before, they have both the physical bricks and mortar elements, but they're very big into supporting the e-commerce side of things. Obviously, Amazon's the top on that. But all of that, those are all great places to be looking, and they're all going to be beneficiaries, companies that are positioned in similar fashions. Well, Ian, thanks for coming on, and stay safe.
Thanks, Jeff. Same to you.
And for all of you, just want to make sure to continue to follow us on social media, and make sure to subscribe to our YouTube channel if you haven't already. I'm Jeff Yastine, wishing you the best. Goodbyes.